Hey everybody, it's Nick Inman, founder of VolumeProfileTrader.com on Wednesday, October 24th, and looking at the S&P futures, the market's still struggling to regain any type of momentum to the upside. This isn't a bad thing. This just shows you who's in control of the market right now, and it's clearly the sellers. So as we zoom in, and what I was looking for, what I've been looking for, is for price to reverse to the downside. So we have seen that. And now I'm just looking for, okay, where's price going to stop going? Where's price going to stop going down? And I figured at the value area high for the year, which is around 1405, basically current levels, that's not a bad place to start looking for the market to kind of bounce and give you some type of reversion back up towards 1425 or so. Well, guess what? We're not getting that yet. So as much as you want to trade a reversal and some type of swing back to the upside, until there is price action telling you that that is indeed what price is going to do, there is no need to thread the needle, because that's how you lose money. So overall, the S&P, it's pretty weak. Let's stick with the sell side. Let's realize that we're at levels which should be short-term support in the S&P. But overall, what concerns me the most is the point of control for the last 90 days is up at higher levels, 1435. What that represents to me, and I'm going to zoom in a bit so you can see, this point of control right here at 1435, that represents to me that all of the emotion, all of the buying and selling that's taken place in the market, the majority of it is above us right now. Since we were in an uptrend and the point of control formed right now at the top end of that uptrend, you have a lot of buyers who basically want their money back. So on any strength, you're going to see reluctant sellers looking to get their money back. So basically, the best way to put it is you have your I want my money back crowd, and I'm just going based off of where we closed today. You have your I want my money back crowd, and they're going to be happy to sell into strength. Now, there are a few things to say to that, and one is, just because there's an I want my money back crowd doesn't mean that the market can't reverse and test that 1425 level. And what I mean by 1425 is you have the value area low for not only the current month, but September. So the value area low at 1425. You also have the 50-day at 1425, the average true range stop at 1425, and in a couple days, the 20-day moving average will be at 1425. So basically, you have a lot of important levels at 1425 that you need to be aware of. So take note of it and realize this is on the S&P futures. On the actual SPX, it's going to be more like 1430 or so. It's off a little bit, so just keep that in mind. Now, I like the S&P futures because it gives me personally a better idea of where the market is in terms of price levels, and that's what I'm most concerned with. So right now, the point of control for the month of August, that's kind of your bogey. We're not quite there yet, which isn't necessarily a good thing or a bad thing. It just shows you that there is potential, more potential downside, but that could also be a potential bottom. So if you're looking at volume on a 1-year scale, we have about from 1392 up to 1406, about a 14-point range, call it 1%, of potential cushion for the buyers or sellers to do their business. And right now we just started to pierce those levels the past few days. So let's see what price does in these levels. If we get some type of reversal, I think you go with it for a couple of days and then kind of, go from there, probably scale out into strength. The NASDAQ at the 200-day moving average, we're also at the top of this big volume here. That was my reason for saying look for a bottom in technology stocks. And sure enough, right here, right now, we're not getting that yet. And that's a little bit frustrating. I've gotten stopped out on a few positions, most notably IBM. Tried it at the point of control for the year, bounced for a day. Well, that lasted a day. And now we're at the value area low for a year. So this isn't a bad place right here, right now, to look to get involved. Short term on a 90-day chart, you have nothing in terms of support. So arguably value area low for the year, basically meaning 70% of the volume for the year. That bottom 70, basically the line that brackets that bottom half, we're at it. Usually it's a good level of support, and we're going to have to wait and see. But if we do get a bounce, something like IBM, not a bad idea. Apple, similarly. Now, earnings come out tomorrow after the bell. So, unless if you like to, in my opinion, gamble on earnings, this is something that you'd want to stay away. I have a small position on Apple. It's basically at a break even right now. But we're at the point of control for the year, which is holding right now. And, I was hoping, well, it happened on Monday, but I was hoping that we'd get a nice little 2 or 3 day bounce into earnings, and I would scale out into the strength. Instead, on Monday, I bought Apple around 613 and actually bought a little more on the way up and scaled out around 630. So, that was a good little day trade, but right here, right now, we're just in sideways consolidation. Short term, are we going up or down? We're going down, but longer term, the chart still looks good. This right here, 604, 605, is at a great level where you should see some type of bounce in Apple. I'm not saying it's going to happen because we have earnings tomorrow, and that's going to dictate where Apple goes. But overall, I'd like to say that Apple's going to try to push off of these levels. Whether it does or not, remains to be seen. Ford, just to point out, this is actually a stock that I'm looking for a little more downside in. Over the weekend, I was looking at a bunch of charts, and this was the one that stood out to me. It was, yes, the 19th. So that was in the picture. Off of this big high volume area, the top of it, we see resistance and, sure enough, selling pressure. Well, we got a little bounce off the 50-day today, and it was actually a pretty nice bounce. It's also the value area low for the year. Keep that in mind. So we have our trading box in in Ford. But keep in mind that I think there's an opportunity that this could roll over more, especially with the fact that the market is basically selling off on any miss in earnings right now. Now, the 30th is when Ford reports, so just keep that in mind. It could trade sideways until then. But a downside target will be 975, and then from there 940 or so on Ford. I could be totally wrong, and this could reverse back to the upside. You do have your risk defined if that's your type of trade. Let me get the handy tool. You just simply place your stop right below, and you see if you can get some upside in Ford. Now, unfortunately, your target's the top end of this range, and there's no certainty that it will get there. You have about until Tuesday, which is when Ford reports. So just want to point that out. And then, of course, we can't talk stocks right now without saying Facebook. Look, they came out with earnings. Obviously, the market liked what they had to offer. Right back to the top end of this range where you saw, obviously, selling into strength. Now, this should be an obvious trade. Facebook gaps up 20-some%. Obviously, you still have, and again, we're going back to it just like the S&P, you still have your I want my money back crowd, which is anyone from basically $24, $25 and up. So keep that in mind. And also the inside selling, I believe they get released soon. I don't know that for sure. I've really only traded Facebook on the first day it was released, and from there on, I have not traded it since. So one other thing to note is the point of control for the year on Facebook, 1978, and look at where we tagged the day before earnings, and then all of a sudden we explode off of those levels. So that, just kind of keep that in mind. Keep in mind the point of control can be one of, the best levels to trade off of, just because that's where the most volume is in the chart. All right, the euro continues to roll over here. Now, there is a little bit of buying strength, but overall, are we making higher lows I'm sorry, are we making lower lows and lower highs? Without a doubt, yes. And the point of control for the year on the euro continues to be resistance. And until that changes, I do think that the trade on euro is to sell. Now, when we get down, assuming we do, get down to this 50-day, 200-day, and these recent lows, get down, call it 128.50, sub 129, 128.50. That's where you look for a potential buy. Now, that could be a really good trade if the euro were to really break out to the upside. You had a nice little trading box here, and then you're looking for some type of resolution. Now, you have your lows and you have your highs. Here's your trading box. You don't want to be buying in the middle of the box, because when has that been right? It's never been right to buy in the middle of this trading box, but it has been right to buy at the bottom. So from the standpoint right here, right now, the sellers are still in control in the euro, and you shouldn't look to buy the euro because that hasn't been the right trade until we get to the bottom of the box. So just keep that in mind. Gold, we're at a level, and I'm going to pull up a 1-year chart. The bottom of this high volume area here, this could be a potential support level on gold. I also want to bring up, just because I'm actually curious, not that I put too much emphasis into it, but Fibonacci retracements. Looks like we're right at 38%, 1694, 1700. Now 1700 was my target to the downside. Here we are. So what would I expect? I would expect some type of reversion, some type of pushback from gold traders, some type of short covering. Does that mean it's going to happen? No, not necessarily, but there's that chance. And also, I just want to point out, and this is on gold futures, so realize, it's a continuous contract, so I'm just going to leave it at that. But the point of control for gold, 1773. Where have we sold off from? Arguably 1773. Why do I say that? Well, before the selling really got extreme, where was our last lower high? And you can see, again, 1773, call it 1775. Keep that in mind, because when the market, usually when the market breaks out or breaks down, there's one last test of the point of control for that given range. For example, right here, 1775 or so on gold. This happens so often. I'll give you a few more examples. On gold, we had a monthly profile. Price breaks out. Where do we test one last time? Now, it was a little north of it, but basically the point of control for the month of, or I should say for the prior month. Let me give you another example. We'll use the S&P because that has worked out well. I'll give you a few examples. All right, back in July, what happens? July ends. We gap higher, so that's a pretty important factor. We gap higher here. We continue up, and then we retest in the new month the point of control for the year, and then we have our continuation to the upside that you can see. In the following month, what happens? The month finishes, the point of control finishes at the bottom of this balance range. In the new month, what happens? We test the point of control, and sure enough, we move to higher levels. Similarly, the month after, what happens? The point of control, 1435 or so, we test it. In the following month, we make a move to the vertical, we make a vertical move. Similarly, well, actually not quite, because this month has not ended yet, but we test the value area high for the prior month. I'm looking at this green line right here. I move it all the way over. Where's resistance 2 times this month? Bam, bam. Point of control for the current month up at 1449. If you want to go back, look at my video from probably last Wednesday or Thursday. I said something about 1449 being your line in the sand. Then your next target would be 1433. Okay, what happened? Price fails. Let me zoom in a little bit here. Okay. In the morning, on whatever, looks like this is Thursday or Friday. In the morning, price immediately fails from this 1449 level. Where do we go down to? We fail. We can't hold 1433. We slice right through it. What happens on the retrace of that move? We retrace to that point of control level. Now it was a little bit shy, but close enough. We got to, well, actually it looks like it was 1443. Let's see. It was this blue line here, not this one. There's your blue line. So we got within 1432, 3 ticks of it. So pretty dang close. And then we see a reversal off of that level and a continuation to the downside. So what are you looking for? You're looking for the next volume support. Here we are. You can see it over here on the far left of my screen. We're not quite there yet, but prices started to slow down. That's not saying that it can't keep going. But right here, right now, the market looks at a potential place where it could bounce. Look at the SPY, the point of control for the year at 140 basically on the money. Now we're holding those levels, to an extent, about a point above. But, you could see another 10 points or so down on the S&P. Nothing would be wrong with it. And then you would look for some type of bounce back, some type of snapback, basically to close or look to close the gap that was made on whatever day this was, Monday. Look to close that gap. So that's kind of what you're looking for. Even if we bounce or move a little lower, you look for some type of snapback, and your target would be somewhere in this zone where you would look to take profits. Now, sometimes it's not much harder than that, and you just kind of got to let it be. So if you're a long-only trader, it's been a tough couple of days, tough couple of weeks. If you've been following me for a while, we've been taking profits, more like raising cash for a while now, actually. I don't remember the exact time, but been slowly, especially into this up move, raising cash. And the reason why is because markets go up, markets go down, and we're at that point where the market's probably ready for a correction. Start of the fourth quarter was actually probably when I said it. With the start of the fourth quarter, what you're looking for is for the theme to change, and sure enough, it did just that. And you look for you look for the market to look ahead to something else. So the election, the fiscal cliff, earnings have proven to be a disappointment, and with that being the case, you've seen a sell-off in the market. So look at the dollar. Is this something that you want to be long or short right now? Well, short term, you'd be looking to take some profits or getting out of dollars, and the reason why is because we're at the top of the range. Now, with that said, that doesn't mean that the dollar can't go higher. We have higher lows here, and we continue to bang up against the top of this range. Every time we beat up against the top, there's a higher likelihood, a higher probability that this thing's going to bust out to the upside. So just keep that in mind. Now, we do have moving averages above us. We are coming from much higher levels. So there's a possibility that this remains resistance, and this rolls over. If that's the case, then you look for the S&P to actually hold these levels and reverse back to the upside. But you look at the NASDAQ, I don't like the fact that the point of control is above us. It shows us that, to say the least, the market's in balance, and there could be potential more downside to the market. And what I mean by that, by the market's imbalanced, is you're looking for some type of bigger trading range. And I'm looking at the highs from earlier this year. I'm just going to move it all the way over. There's two ways to look at it. This being your trading range, where you had resistance, support, maybe support. Or you could look at it in a bigger trading range if earnings continue to disappoint, and you go down to where price was last supported. And you can see it was down basically 25.50. You see we have huge volume right here, so that would be a likely downside target. Just like this big volume right here is a likely target if price can't hold the 200-day or the top of this volume. So really, there's no other way to get around it. If you're looking for the best levels, you're looking for volume. And the reason why is because that's where the emotion is in the market. That's where you can look to get involved. And right now, the only thing I'm really doing is day trading NASDAQ futures. And if you saw my tweets today, you noticed that I opened up the room. You could have came in. I took a few trades, made about $500. Not a big deal, but definitely not too shabby either. And you kind of go from there. So anyways, I hope this serves you. I hope it gives you a little indication of what I'm looking for. Potential market bounce, but the realization that the market's moving lower right now and we could see some more downside. So be nimble. That's why you raise cash when the market rallies, because, you know, even if you don't catch the exact top or the exact bottom, which isn't a bad thing, you put yourself in a position where when you see these pullbacks and you're a long-only trader, you're not freaking out. You're not losing money. Rather, you're looking for opportunity. And one thing to say is volume profile will put you on the right side of the trade. I should say earlier this month, we faded against the prior month's point of control. September's point of control faded into the employment numbers, and that ended up being a 175% gain on some QQQ put spreads. So just keep that in mind, that there's a lot of opportunity in the market, and you can take advantage of it on a daily basis, weekly basis, monthly basis. The choice is yours, but you have to determine it. So anyways, hope this helps. Have a great night, and I'll talk to you next time.